Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. What do I have for you guys today? Well, some people are still telling me, Mitch, please give me some confidence. You know, my average price is in the 20s, the 30s. What I would say to you guys is what I would do. If my average was in the 20s and 30s, I would be averaging down every payday little by little. And that's what I would do only because I believe in the company, only because I believe in the CEO, only because I believe in the business model. I'm not looking at the stock price. Only because I believe in the delivery system. And I would continue to average down. That's just me. Every payday. Now imagine on one platform my average is only $3.53, but yet I'm still buying on other platforms. That's how much I believe in the company. Now, I said it before and I'll say it again. I bought NEO the day they came on the stock market at $14. And as the stock started tanking, I continued buying and brought my average to $3.53. I hope this gives you guys confidence to understand, based on all what the Chinese government is doing, in order to ensure that they are the #1 in the EV industry and the clean energy industry, which we see, as I showed in the last video. Take a look at this clip, and then we'll continue with the meat of this video, guys.
BYD's Executive Vice President Stella Lee also disclosed that the car company plans to shut down any plans for expansion in the United States.
We're not planning to come to US.
No plans to come to the US?
No.
Why not?
It's too complicated. It's an interesting market, but it's very complicated if you're talking about EV. I think the US market is a little bit slowed down on electrification and a lot of confusing, also very complicated. So we think, no, let's hold. We don't have plan to come to US.
The politics are complicated.
Everything is complicated. Politics complicated. Charging infrastructure complicated. And then it's confused for consumer. And then they don't know which to choose. So then I think.
What do you mean when you say it's confusing for the consumer?
Here in US is you have too many confusing noise, speech from different politics. Then this can bring a lot of confusion to consumer and also to auto manufacturer. They're not eager to invest.
You don't think they're eager to invest?
No, because I read the news, always see, this company hold their investment on EV, that company hold their investment on the a battery manufacturing. A lot of topic, we don't know what's happening. But in China, the message is strong. If you are not investing for electric car, you are out. You will die. You have no future.
So let me challenge you on that bit, because I think the White House would argue, yes, China has had a lot of success on EVs. We are trying to accelerate this adoption to going electric. You've got the Inflation Reduction Act that does put forward incentives. It does put forward subsidies as well. When you think about where China is right now, 35% roughly penetration, right, for EVs versus the US, which is at 7%. Is the Inflation Reduction Act enough to get it to that? Or do you see fundamental differences in the approach between the US and Chinese market in the government push?
It's fundamentally different. In China, the government will push that like a policy, also will help for the policy. So as long as you produce in China, not produce in China, as long as you produce electric car, then consumer will get a benefit. It's like a give guideline. Then you boost a lot of company to compete. But the U.S. policy with the IRA, actually, this is have a lot of restriction with the Chinese supplier here, and then this bring a lot of complexity to the current EV manufacturer. As you may know, for the battery technology, for a lot of technology, China supply chain is a key player. If you trace down all from the cell to the raw materials, China is 70% of the supply chain. But now for IRA, a little bit too complicated for any OEM to achieve that target.
So you're saying it's not an all-in approach?
It's not all in. It's not all in. They should be all in, and then they should be open. Remember why US is competitive is strong because we are open market. We welcome everybody to come here to have free competition. And there is like a capital market, right? But now it's become more protect market.
Let me ask you this, because you say that you have no interest in coming to the US, but as you know, given your growing presence in Mexico, there's a lot of American car companies that are taking note saying BYD, Chinese car makers, are knocking at the door into US entry. And I want to read you a few things that we've heard from some leaders in the EV space. Elon Musk recently saying that Chinese automakers will pretty much demolish most other car companies without trade barriers. Those are his words. You heard the Stellantis CEO saying the Chinese offensive is the biggest risk that companies like Tesla and Stellantis face. And then you had Jim Farley from Ford recently saying if you can't compete fair and square with the Chinese around the world, then 20 to 30% of your revenue is going to be at risk because of the cost advantage. Do you agree with that assumption here that if those trade barriers aren't in place, the Chinese can compete fair and square and actually win this market?
So I kind of have a different opinion. First, like for example, BYD invest manufacturing in Mexico is mainly focused on Mexico market. So that's the reason we're not even consider any Lawson state. A lot of US brand, all their manufacturing are in the north because it's easy to cross the border. But for BYD, we are more looking for the place within 200 kilometers, like a radius from the Mexico City. So we are more target local market. So that's BYD strategy. We are not really planning to come to US. So then second, I think this is a similar story if you're thinking about the auto history, maybe 20, 30 years ago, when Japanese come to US, it's the same. Japanese are going to kill us, But in the end, still, we have a local brand. If they participate in competition, they will find a way out. They will be winner. Then any foreigner come from Japan, from Korean, they only share a portion of the business. So that's, I think for electric car, they are a little bit overreact on a little bit too scared about a kind of Chinese competition.
Tesla's profit margin is starting to dwindle and will likely continue on this part for the next few months. Although many Tesla bulls remain optimistic about the turn of events, the bitter truth is that Tesla may not be so profitable this year, and that's what most investors are not happy about.
CEO of BYD America, Stella Li, to talk about the company's evolution and the key markets the firm is aiming to compete in outside of China.
I think every country besides the US we saw the trend is almost duplicate the story of China in the past 10 years. Like for example, in Brazil, BYD into Brazil 1.5 years ago. But then in the beginning of last year, the EV penetration in Brazil is less than 1%, it's 0.8%. But by the December of last year, the EV penetration is 5.7%. BYD is a big a contributor there also. We went there, then we start become maybe the top 10, the number 10s, a largest brand in Brazil with only a electric car and the PHEV. So then this kind of story is happening in Thailand and also Israel and also other countries. So we see this kind of story, this kind of similar pattern is for the EV adoption, it start with slow but not jump, and then we're fast growing in every other countries.
So you're saying you think BYD can compete in all those markets you just mentioned?
Yeah. Yeah, for sure. Because the Chinese market is the most competitive market. If you are the winner in the most competitive market, why not? You cannot win in other market. It's just about the timing issue.
All right, guys, welcome back. So I hope you guys appreciated that little clip where even BYD said they are shying away from the American market because of, the lady was trying to be politically correct, but a lot of it is because of the policies, the protectionism, and we claim to have a free market, but China has a freer market than us because they told Tesla, no problem, you can sell. They told the European manufacturers, no problem, you can sell, knowing fully well in the confidence that they have in their own industry. Now, listen to this. NIO reported mixed fourth quarter results and submitted light outlook for first quarter 24 deliveries for the first quarter. Excuse me, guys, light outlook for the first quarter. The EV maker reported better than expected fourth quarter revenues, but EV demand is slowing, which may, together with concerns over near-term profitability, weigh on the company's valuation factor. So the EV demand is slowing in the West, but not in China, not in Russia, not in South America, etc., etc. NIO's vehicle margins are improving, however, which was a major takeaway. Let me say that again. NIO's vehicle margins are improving, however, which was a major takeaway for investors. Stronger margin growth could accelerate the firm's profitability timeline. Shares trade at half NIO's first-year average PS ratio, implying that investors are overly bearish. NIO's reported mixed results for the fourth quarter that saw 7-cent EPS miss, but a $70 million revenue beat. The electric vehicle maker reported single-digit top-line growth for the fourth quarter of 124, was only light and missed consensus expectations. However, the company is making crucial progress when it comes to its vehicle margin trend, which I believe will be the defining theme in 2024, with NIO growing into a larger production footprint. While vehicle margin expansion could accelerate NIO's profitability timeline, while there is a risk the shares drop into the penny stock zone, shares of NIO are cheap based off of revenues and have revaluation potential in the longer term. I rated NIO a strong buy due to the company's extended liquidity runway following its last convertible senior debt offering, as well as a solid delivery momentum in the second half of 2023. Why 2024 could be the year of NIO? Now remember, I keep saying this is our year, so here's an analysis talking about it. I also see continual margin expansion potential for NIO after the EV maker reported its third consecutive quarter of margin growth, also reported a sequential improvement in its margin profile in the fourth quarter, with both margins and deliveries pointing upwards. I believe it will only be a question of time until NIO's share price follows. NIO delivers a decent earnings report for the fourth quarter 2023. So it included total revenue of $2.41 billion compared against the consensus prediction of $2.34 billion. NIO missed on adjusted earnings, with its figure coming in 39 cents, which was 7 cents worse than the EPS expectation. NIO generated revenues of $2.4 billion in the fourth quarter, showing only 7% year-over-year growth as the EV market experiences headwinds in terms of demand and more EV makers are competing for customers in the segment. For those reasons, NIO also saw a dip in delivery volumes in the fourth quarter, during which the EV company delivered 50,045 vehicles to its customers, a decline of 5,387 units. Now, let me say this before I continue. As NIO continue to go into other markets and show the incredible business model that we have with battery as a service, which is catching on, and we see in China, over 87 million swabs. The last time I looked, it's probably even more than that now, to show that it's a winning business model, even though the negative Nancy's in the beginning were trying to convince us that it's cash burn and it's a waste. Now, an American company is also trying to do it. So as we continue to build out and increase revenue from that and go into the UAE, as I spoke about, and Dubai and other countries, what do you think will happen to our revenue, guys? This is why I say have confidence based on what we're doing, not on what you see the share price is doing. And it will give you the confidence to keep averaging down in order to become millionaires. This is my last chance. I truly believe that. I keep saying that, and I'm not missing this boat. So since NIO is still ramping up its production of SUV and sedan models, and because delivery volumes dropped, NIO also reported expanding losses on an operating and net loss basis. So while the lack of profitability is something that has been weighing on NIO's valuation, the EV maker's margin profile continued to improve. So this is what happens, right? So some of them, they call it cash burn. Yes, we have to use cash to build the factories, to buy the factories, to build the battery swap stations for research and development, because we're a new company and we're going to continue to spend money on research and development even when we become profitable, because like I said before, we're making it's not just a car, it's an EV, it's a computer. So NIO's vehicle margin expanded for the third consecutive quarter in fourth quarter 23 and now stand at 11.9%, showing an increase of 0.9%. NIO's, they reached 22.7% in fourth quarter 23, which is see Li Auto as the most promising stock in the beginning, but now even Li Auto will be falling behind. We saw what happened with the multi-purpose vehicle that they released was a total disaster and failure for them. It was as ugly as the refrigerator that Tesla made and told you it was a truck. So the vehicle margin trend is obviously a positive, as is the potential lever for NIO to reduce its losses going forward and accelerate its profitability timeline. NIO is currently expected to be profitable by 2024 this year. NIO is going to release 2024 models of its current SUV and sedan lineup with the updated hardware configurations, and the company has said that it will launch a new model, the ET9 sedan, in first quarter 25. So this analyst is saying that they expect NIO to become profitable by the end of this year. The ET9 sedan marks NIO's entry into the luxury sedan EV segment. I want to skip some of that fun. So NIO's it will also include shorter range vehicle options for consumers. Therefore, I expect NIO to become a lot more active on the expense side of the business this year. Work out production improvements and lower operating expenditures in a bid to control cash burn. NIO projects to deliver between 31,000 and 33,000 electric vehicles in the first quarter, implying 6.3% year-over-year growth in the best case. Revenues are projected to come in between 10.511 billion Chinese yuan, potentially showing growth of up to 3.8%. That's in the first quarter. The outlook is light and came in below consensus. NIO's licensing agreement with 47, it talked about that. It talked about investment in majority by the Abu Dhabi government. I called the deal a game changer, this analyst is saying, the Abu Dhabi investment. Because it shored up the company's balance sheet, improved its liquidity profile, and showed confidence in NIO growth strategy. 47, it speaks about that. The British startup that will build luxury EVs and is also financed by CYVN Holdings. We gave them a technology license agreement and we'll be getting revenue from that. NIO's valuation is still the biggest reason to invest, he said. While NIO needs to get a grip on its profitability situation, which it will with the sub-brand, excuse me guys, I believe the margin trend was a positive takeaway from the earnings report. Additionally, NIO is most attractive as an investment in my opinion in terms of its valuation. The EV maker shares are trading at its lowest PS ratio recorded in the most recent past. The one-year average, which I am using since NIO is not yet profitable, is 1.30 times. So if NIO could only revalue to its one-year average sales multiplier, then NIO could double its valuation to about $10.80. In the long term, I see a fair value of $11 for NIO, as I explained in my last work on the EV maker. This fair value has not changed since my last coverage, but it may change going forward depending on the company's progress in terms of delivering growth and narrowing operating losses. So I believe that this analyst will have to reevaluate that when we release the Tesla Model Y killer. So final thoughts, he said, NIO delivered an overall decent earnings sheet in the fourth quarter that showed expanding operating net losses, which was expected, but also a somewhat disappointing near-term outlook for its first quarter deliveries. However, on the positive side, NIO was able to expand its vehicle margin to 11.9% in the fourth quarter 23, representing a 0.9 pp change, and it marked the third consecutive quarter for positive margin growth. which is the reason together with the valuation why I maintain my strong buy rating. Shares of NEO are a bargain based off of revenues, which will likely reflect overly bearish investor sentiment with regard to the company's profit situation. So, mind you, he said NEO are a bargain based off of revenues. So, where did the revenue come from, guys? Did it only come from EVs? No. We know, and I have been saying this, that revenues are coming from not just selling EVs, which the negative Nancy's, the trolls, the shorts were coming to try to spread fear, to beat the stock down. Oh, well, their deliveries isn't up. Oh, well, Tesla is outselling them. This is the narrative they were trying to use. But that's why I was replying to some of them on Facebook groups and what have you, saying, we are a luxury premium brand. One of our EV is 2 times, sometimes 3 times the price of a Model 3. Of course, you're going to sell more of the cheap models. But what do you think? Let me say it again. What do you think will happen when we release Alps that kills the Model Y? What do you think will happen when we release the Firefly, one of the Firefly brand, and I should say one of the Alps brand, because there are many to come. Many. And when that happens and we flood the market, guys, the amount of money that we're getting ready to make, this is why I keep buying every week. Whatever I can, I keep buying. Because I truly believe, not based on hearsay, not looking at the share price and panicking, I am basing it on what the company is doing and future projections. Let's see if Money Making Mitch is right yet again. I was right on Miniso. I was right on Luckin Coffee. I was right on cryptocurrency. Let's see if I'm right on the great NEO. So all my NEO lions and lioness, I hope you guys found this video to be informational and inspirational. If so, don't forget to hit that thumbs up, please, guys. And don't forget to share this all over your social media. Share it to your friends. Let's bring more awareness to this channel and NEO. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we have that warrior mindset, like 50 said. We get rich or we die trying, guys.